Good morning, everyone. Today is December 3rd. It is Tuesday, and I wanted to bring this to your attention, metals and miners. So let's take a look at this a little bit and really try to understand, what's going on and where I think we're going to see a a very big move in metals and miners over the next 2 years plus. Okay, so we have just now gotten out of a 618 kind of congestion phase. And you can see here that we've had an inverted, let me draw this in a different color so you can see it. We've had the inverted excess phase peak pattern set up, moving into the congestion phase and just recently breaking out. Now, what I need you to understand here is that we've got the low value here, one. We've got the congestion sideways flagging here. We've got the breakout two consolidation here. And now we're just now starting what looks like the breakaway phase. Now, this breakaway phase should send the markets, at least likely move would be somewhat equal to this. And if that's the case, from this level or even from this level, we're talking about going up to $92. If we move up into this level where we're at recently, we're going up to 107. Now, take a look at, and let me get rid of this ATR. Take a look at what gold and silver, and yeah, I know I need to move it down to a lower pane. On a new pane, yep, okay, and here's gold. Move to new pane above. We'll put gold on the top. Take a look at what happened over here. So miners really accelerated over here. While gold ran up, this is silver, ran up from 12 to 20 bucks. Yeah, okay, a 70-80% move. Then we saw this acceleration here after the great financial crisis. This was miners collapsing. You can see silver ran all the way down to $9 and then rallied all the way up here to, if I remember right, about 50 bucks. So I can't get to it yet. There we go. 48, roughly 48, 49 bucks. So, but look at where we're at right now. And this is what I want you to realize is that the next breakaway phase here could put miners up into regular scale, and could put miners up into the $100 to $110 range. And I think that this is going to be a move that's going to send gold skyrocketing. I think it's going to send gold literally up into, now this is a monthly chart, but I think it's going to send gold literally skyrocketing up into the $6,000-7,000 area, possibly by 2027, 2028. That would theoretically move silver up into the $75, $80 area by roughly that same time frame, 2027, and I'll do it here, 2027, 2028. Okay, so if I am correct and the excess phase peak pattern plays out over here with miners moving away from this congestion phase and potentially moving up into this rally phase, driving metals with it, I think we could be looking at, potentially, when we think about this type of a move, I believe we could easily be looking at, and I'm going off of rejection points here, a move easily up to 92, possibly up to about 110, I would say here to 116. So I'm going to mark it here to 92, and then I will mark the 110 level right over here, and then I will mark the 116 level right here. And what am I doing to get to those levels? I'm marking this low rejection point right down here. I'm coming up to this high rejection point right over here, and coming down to this rejection point right over here, which is really this one, confirmed by this one. And that gives me a projected upward target. And what I'm looking at primarily is the 1% target, the 1.382, and the 1.5. That's what I'm looking at as far as targets. So what we're looking at here is a move, a substantial move in miners, potentially moving from where we're at right now up 37 to 60, maybe 72% to the upside. And the reason I'm bringing this to your attention is because SILJ, even though it seems very underperforming at the moment, again, I've been calling this for the last couple of days, talking to people about how this move is really playing out. This deep, deep low. I really love this. You can see here through these channels. I'll go back to weekly so you can see it. And come over here to auto scale. I love this setup. I just love this setup. I mean, deep low, you can see that SILJ, yeah, it's been lower. It's been lower back over here in 2019 and been lower through COVID, lower back here in 2022 at the bottom, and retested these lows considerably across this area, which essentially realigns kind of with these lows. You can see they're very close. I love this basing bottoming formation here. I mean, you spread it out, you can see that we had no close below this lower level. So you can see as we come down, so let me check here, this lower level. Oh, barely a close. So I would have to do it here, and we would be looking at, again, a kind of a broad downward channel moving into flagging here. We didn't get below this low channel here, which is actually up here. Came down close to it, came down to a double bottom, tweezer bottom formation. But now we're moving into the consolidation phase. And I've been looking at this trying to figure out where the consolidation phase is. And I think what we're looking at again, folks, is that this looks like a rally, pause, rally to new high, pause, rally to new high, pause. And I think the congestion phase is going to be basically right here for the excess phase peak pattern. I think this has been essentially a kind of a sideways consolidation, kind of like this, you could say, rather than a horizontal consolidation. And I believe what we're looking at now is the breakaway phase. And I think we're going to move into this really solid breakaway phase. And again, if we were to just take a look at, this move from here all the way up through the consolidation phase, come here, up to what I believe is the peak of the consolidation phase, come down to where we're at this recent low, moving us up to the 1.0. Remember, the levels I need to look at, or I like to look at, are 1, 1.382, and 1.50. That puts us in a area where we could see a move up 55 to 72, maybe up to 84% to the upside. So you have a minimum roughly of a plus 55% rally phase here potentially up to plus 82% rally phase here in metals over in miners and SILJ over the next roughly 2 years. Now, granted, I know that these ETFs have cost and minor deterioration, but I really think at these levels, these $12 levels, I think it's almost too good to pass up. Maybe some long term options if you feel that way, but even a small anchor position, 1,500, 2,000, 2,500 into something like this would give you the ability to really keep this on your radar. And again, there's other miners stocks and miners ETFs that you can get into. I know even Vanguard has them, but XME again is looking very solid. So, you take a look at this, you take a look at where we're at. We're in that consolidation phase from the 22nd of, April 2022 till now. You come back over and take a look at SILJ. We're in a consolidation phase. I mean, we could technically, from a big broad standpoint, let's see how much data we have coming down here, low, rolling, low, lowest low. I mean, we could call this the big move down up into a pullback, into flagging, down to here, rolling out of flagging, but not yet. Let me draw a line across here. Not yet getting out of this consolidation range. And again, maybe it'll be easier to show it to you on a monthly chart. So let me draw these again in blue. And in blue, this is the bigger excess phase peak pattern. And this would mean that we have this deep low down here as our breakdown low level. We have this breakaway move here as our upper level. And we would be right now, if this is correct, which it seems to be correct off of this deep low, we would be rolling in this sideways channel right here, attempting to break above this level, which would move us into the seeking of the next phase of this pattern, which is the congestion phase, which could be, again, much larger. It could be easily as big as this. So, easily as big as this to the upside, which would mean if we break to the upside, we could be up into this $34 area. But I want you to be aware that that would be a big, big move. And really, if I were to move this down to where we're at right now, that's 179% rally phase. I mean, that is massive if it rolls to the upside, like I'm suggesting. So be aware. I think this move, what I'm really trying to tell you is that, we're coming into a Trump presidency. Metals have been very deeply contracted. Miners have been contracted. Here's my gold chart. We're flagging out. We're starting to move higher. Silver's trying to break out. Look at this here. That's why I think silver's such a great move. So we'll come over here to a 4-hour chart. And you can see silver we've come up to 30, 33, 35 bucks, come back down through the election. Really, silver is deteriorated down to 30 bucks. We've lost about 15%. Now we're basing in that consolidation phase, getting ready to break. And again, the break is going to put us up into this target area, 3350 to 3450 area very quickly. A long term, like I said, if we come over and take a look at a weekly chart, you can see we've got that very deep low. Here's silver. So you can see we've got this very deep low coming through here. And there it is. I mean, there's the big move. I don't know how far back we can go, but this is a very deep low. This is a very deep low. So the way I would mark this with the excess phase peak pattern is these two unique lows, this 2009 low and this low here. Actually, this low plays out. This is COVID. But here we go. So give you an example. Here's our move down to the low. Here's our pullback. Here's our flagging coming down. Here's our breakaway COVID, come back up here, run into consolidation. This is our sideways consolidation pattern. Here's our consolidation move here, breaking out, now heading up into this move into this area. And the way we can tell how big this is going to likely be is from the end of the flagging to the consolidation. We can come over here and look at roughly that same move. From the consolidation area up to where we're going to stall is 45 bucks. This is the bigger move. Now there is a secondary move. Okay, so we've got a lot of lines here. Let me come in here and make this a different color. Purple, 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 and purple. The next move, guys, is right here off of this COVID low. So we come back in here, we pick the COVID low, come all the way down, come back up to this consolidation, flag sideways. I'll make these orange. Trying to get the same color. There we go. Now we come back over here. We're getting into the breakaway phase. Where are we going to go to break out of this move? We're already above it in silver. We're going to be moving up towards that consolidation range. Very simply, guys, we come down off the COVID low up to this peak. We drag this from this level over. That puts us up in the 46 to 45 area. Again, looking very solid to potentially have a target area right over in this area for silver over the next 2 to 5 years. But understand that this would then move us into consolidation, and then we would move up into an expansion phase even higher. So remember, this move, this entire setup, which is contingent upon this consolidation, means we're going to rally up to a new ultimate high. But then this move means we rally up to consolidation and then rally up to the ultimate high. So what we're looking at is a very solid, potential 200, 300% move in silver. We're currently right down here, potentially up 44% or more to the next consolidation phase, or potentially up 135%, maybe more, 150% up into that big, broad rotation to the ultimate high up here. And my assumption is we're going to get some very big explosive moves over the next 2-3 years, which is why I think that SILJ is really just a bonus right here. I mean, as much as I'm going to tell you right now, it's undervalued and you're going to have to wait 2-3 years. But what a move. I mean, if silver moves up, this is monthly again. If silver moves up to 70, 75, I'm telling you, this sucker could go all the way up to about 2.5 times this move, all the way up into this $45 area, which would be about a 300% increase. It could get really wild in the metals markets. But again, the whole purpose of this video was to come back down here on daily and look at this move. Look at this nice setup right here. This basing, bottoming, breakaway, love it. I absolutely love this setup. And I think even on a short-term trade, you're talking a move from roughly this level up to this level, you're talking 24%. Who's going to complain about a potentially 24% rally in SILJ? Really, who's going to complain? Okay, that's it. I just want to bring this to your attention. Yeah, I know I draw a lot of stuff, but sometimes it's important for you guys to see what's out there, see what's setting up. And I'll bet you this translates into a lot of other metals and miners, ETFs and sectors like the Vanguard sectors and others. So be aware, the opportunity right now is very ripe for these metals positions, maybe seeing a 50, 60, 80% move over the next 6 to 12 months. Okay, guys, go get some.